Working with a trading journal. In this lesson you will learn how to collect and analyze trading data, what you should know after collecting at least 30 trades, what you should know after collecting 100 trades, what are benchmarks, what is a benchmark breach, and what should you do if one occurs. Before trading a strategy on a live account, experienced traders will test the system using a demo account. You can use a spreadsheet to store the data and analyze it, in order to ascertain whether the strategy is profitable over a sustained period. In order to do this, you need to record the correct data. First of all, you need to record the time and date of each trade. This is needed so that you can check and reference your trading after your trading session has finished. There may be times where your strategy is not particularly profitable, such as specific days of the week or particular times during the day. You can ascertain this by recording the time and date of your trades. This data is especially helpful to see how the price action looked at the time when you entered a trade on your chart. The next thing you need to record is the currency pairs that you trade. This is necessary in order to know which pairs are profitable and which are not when trading them with your strategy. You may need to remove unprofitable pairs from your system or explore new pairs to be incorporated into your future live trading. Next, you must always record the entry where you place your stop loss and the price at which you closed your trade. Recording these will make it easy for you to check the risk-to-reward ratio for individual trades and will ensure that you continue to adhere to correct money management. You can also observe, over time, whether your risk per trade is staying within an expected range or becoming higher with individual trades. If so, you can investigate whether this is simply the result of changing market conditions or if you are deviating from the rules of your strategy. It is important for you to record the final results of your trading in pips, percentage gained on the trade, and the cash value. This allows you to keep a check on the profitability of the strategy over time. For instance, you may notice that the system is becoming gradually less profitable. This could be the result of changing market conditions or of not following the rules of your system. Either way, you can investigate whether the strategy is either worth pursuing in changing market conditions or whether you need to make some adjustments to your trading. Now that you have an idea of what to record in your trading journal, we can show you how to use this data further and turn it into meaningful information. Firstly, you can assess the combined overall profit or loss of the system. This is essential in determining whether the strategy is profitable overall. This will help you through losing streaks because you can refer back to the overall profit for confidence. The total amount of trades taken is a significant factor for either developing confidence in your system or deciding whether the system is worth pursuing. If you can see that after a small number of trades you have made a loss, you can still continue trading because you have not taken enough trades to assess the system properly. On the other hand, if you can see that you have made a loss on your account over a significantly higher amount of trades, then you may feel that the strategy simply does not work. Determining the distribution between the system's winners and losers will help you deal with future losing streaks. If the system makes money but only has a small percentage of winning trades, then you can continue to trade confidently when losing streaks occur, because you know this is normal for the strategy being used. However, if your system is losing money with a higher percentage of winning trades, then you have highlighted that there is something wrong with the risk management aspect of the system. Knowing the average risk and average reward is vital, so that expectations can be more aligned with the reality of the performance. If your risk on individual trades begins to vastly exceed that of your average reward, then you may have to assess your system and see whether market conditions are changing or whether you are adhering to your strategy. Every trading system should be tested with at least 30 trades. This is because many systems have losing streaks, and you need a relatively decent sample size to initially assess if the strategy is or is not profitable. If a trading system is not profitable over 30 trades, it is likely that modifications are required, or the system is simply not worth using with real money. If this is the case, you may want to find an alternative strategy to test in the same manner. If the strategy is profitable over 30 trades, then you can continue with the testing of that strategy. Once you have shown that the strategy is worth pursuing after 30 trades, you can test the system more extensively over 100 trades. If the strategy is profitable over 100 trades, you can then feel confident taking the strategy to a live account. With 100 trades, you can also ascertain the following. How often do losing streaks tend to occur? What kind of drawdown does the system produce? What is the ratio of winners to losers? A benchmark is the maximum negative impact you will allow to have on your trading system. For example, it may be the maximum amount of trades suffered in a losing streak, or the maximum percentage drawdown that the system has suffered. You create your benchmarks by observing the data you have collected while testing the strategy, and using the worst result from that testing. So, for example, if the maximum percentage drawdown of your trading account was 10% while testing your system, then this is the benchmark when trading with a real account. You can then consider any drawdown as a natural part of your strategy, until your drawdown exceeds the benchmark of 10%. When a benchmark is broken, however, then this is the point when you stop trading on a real account and assess the strategy again. This means going back to a demo account and testing the strategy over 30 trades. If the results or the retesting are positive, then the benchmark can simply be adjusted and live trading can continue. If the trading results continue to be negative, then you may have to assess whether your strategy is still worth using. You may need to continue trading on a demo account until the results start to become positive, or you may want to pursue a new strategy altogether. In this lesson, we have looked at the process of collecting trading data in a manner that you can use to improve your trading performance later on. You have learned that a basic spreadsheet can help you meaningfully collect the trade data and use it to test the performance of a strategy. You should test the profitability of a system for an initial 30 trades. You need at least 100 trades to assess whether the strategy is successful overall. Benchmarks help you know when a system is not performing as it should be. Benchmark breaches allow you to avoid losses associated with system failure.